Before we get into the details of today's video, join our $100 giveaway! Just comment blockchain of Rob below. The winner will be announced in our Telegram group. Don't miss your chance!
The regulatory landscape, from legal war to global green light. There's no dancing around it. June 2025 is shaping up to be one of the most decisive months in XRP's history. Not because of an ongoing battle, but because of the profound and powerful aftermath of a war that has already been decisively won. At the center of it all, Ripple's landmark settlement with the U.S. Securities and Exchange Commission. What started back in 2020 as a defining, industry-spanning legal saga has finally concluded, not with a whimper or a quiet compromise, but with a resounding victory that has fundamentally rewritten the rulebook and risk calculus for digital assets in the United States. For nearly 5 years, Ripple relentlessly fought an expensive and resource-intensive campaign to prove what its community and its developers have championed all along. XRP is not a security. It is a currency, a peer-to-peer bridge asset, and a critical, indispensable tool for building real-world financial infrastructure. This wasn't just a corporate legal defense. It was a crusade for clarity for the entire American digital asset industry. The settlement, finalized earlier this year, has unequivocally provided XRP with something no other major altcoin can currently claim in the US: unprecedented, unambiguous regulatory clarity. This isn't a partial victory subject to appeal, nor is it a temporary truce. It's a definitive green light from the world's most formidable and influential financial regulator, an outcome that has sent powerful shockwaves through the global financial community. The central question that held back trillions of dollars in institutional capital, the persistent, nagging question of whether XRP constituted an unregistered security, has been answered with finality. With this immense obstacle now obliterated, we are witnessing a seismic shift in real time. The conversation has pivoted sharply. It is no longer about if XRP can compliantly operate within the US financial system, but rather how fast and how deeply it will now be integrated. And make no mistake, everyone is moving. Wall Street, Silicon Valley, global banks, hedge funds, and conservative fintech firms who were forced by their risk departments to watch from the sidelines are now actively and aggressively engaging. The floodgates for institutional capital are not just creaking open. They are being dismantled. Exchanges like Coinbase and Kraken, having already relist XRP, are now architecting deeper institutional-grade products around it, such as custody and prime brokerage services. And perhaps most importantly, the settlement has paved a clear, unobstructed runway for Ripple's long-anticipated XRP-based exchange-traded funds, ETFs, a development that could potentially unlock tens of billions in mainstream retail and retirement fund inflows. This victory serves as a powerful blueprint for the industry. From Stellar to Algorand to HBAR, other projects with strong utility arguments will now look to Ripple's legal strategy as the model for future regulatory engagement. But the immediate, overwhelming advantage belongs to Ripple. The SEC, in its attempt to make an example of Ripple, inadvertently stress-tested them for years, forcing them to build a compliance-first operational model that has now become their greatest strategic asset, a regulatory moat that no competitor can currently match. So why does this matter now in June 2025? Because we have moved past the regulatory cliff's edge and into a new landscape of opportunity. The uncertainty that plagued XRP for years is gone, replaced by a clarity that acts as a powerful catalyst. Every institution, every fund, every payment provider watching this space knows that regulatory clarity is the ultimate prerequisite for deployment at scale. And Ripple didn't just survive the SEC. They emerged with a legal and regulatory status that makes XRP one of the safest and most attractive digital assets for institutional consideration in the world. They haven't just redefined the rules of the game. They've started an entirely new one, with a significant head start. XRP market dynamics, the post-settlement explosion phase. While the legal victory celebrations continue to echo through the global financial industry, the XRP market itself is exhibiting all the classic, textbook signs of a post-clarity accumulation phase, one that is meticulously priming the asset for its next explosive leg up. For those paying close attention, not to the fleeting noise of social media hype, but to the deep structural signals emanating from on-chain data and institutional order books, it is abundantly clear that a massive, fundamental repricing event is underway. This isn't just typical crypto volatility. This is the distinct, powerful sound of a globally significant asset recalibrating its value based on a new, clarified, and institutionally accepted reality. Let's start with the numbers on the chart. With the current price now hovering strongly around $2.18, XRP has not only surpassed but has decisively shattered its previous psychological ceilings. The old, long-fought-over support zone around the 50 cents mark, a level that defined its market for years, is now a distant memory, a historical footnote from a bygone era of uncertainty. The new battlefield, the new front line, is about establishing a strong, high-volume foundation above the crucial $2 level, turning previous resistance into fortress-like support. On the surface, daily price swings still occur, as they do in any market, but the underlying pattern is undeniable and profoundly bullish. Every significant dip, every period of brief profit-taking, is being met with a ferocious speed and depth of volume that points to deep-seated, patient, and price-insensitive demand. This is not the erratic, emotional buying characteristic of retail FOMO. This is the methodical, programmatic, and relentless accumulation that is the hallmark of institutional players executing a long-term strategy. Technical analysts are no longer circling a sleeping giant. They are now actively charting the flight path of a titan that has been fully awakened and unleashed. The Relative Strength Index, RSI, a key momentum indicator, remains in a healthy, bullish posture across high time frames like the weekly and monthly charts. While strong, it is not yet in the deeply overextended territory that would signal exhaustion, suggesting that this powerful move has both strength and sustainability. Similarly, the Moving Average Convergence Divergence, MACD, remains firmly bullish, signaling persistent and building positive momentum. But the most telling and irrefutable evidence lies buried deeper. Within the on-chain data, exchange reserves of XRP continue to plummet at an accelerating rate. This is a massive structural signal. It indicates a powerful, sustained shift of assets off liquid trading venues and into long-term cold storage and institutional-grade custody solutions, a classic sign of deep, unwavering long-term conviction from so-called smart money. Furthermore, we're seeing on-chain metrics for dormant supply wake up as long-term holders begin to strategically position their assets for the new market paradigm. While new, discrete whale-sized wallets are steadily accumulating without causing major price spikes, absorbing supply quietly, we are watching a new, bullish market structure form in real time. The next major technical and psychological hurdle is surpassing the previous all-time high of around $3.40. A decisive break and, more importantly, a weekly close above that level with significant volume confirmation would signal the start of a true, uninhibited price discovery phase where past resistance levels become irrelevant. Technical models, which analyze historical price fractals and apply Fibonacci extensions based on this new major impulse wave, now suggest that a sustained rally into the double-digit range, with initial conservative targets of $5 to $10, is no longer a fringe prediction but a calculated forecast based on the powerful new fundamental reality of absolute regulatory clarity. And this moment is profoundly different because, for the very first time in its history, XRP's powerful fundamentals have not only aligned but have been supercharged by this definitive legal victory. Unlike the hype-driven runs of the past, what we're witnessing in mid-2025 is a market finally maturing into its now unrestricted, real-world use case. Ripple isn't just announcing partnerships anymore. They're activating them at scale, especially within the vast US market. They're not just pitching ideas. They're executing on tangible, real-world tokenization pilots with compliant US-based financial partners. RippleNet is becoming the global infrastructure backbone it was always designed to be. Here's the key takeaway. XRP doesn't trend gradually. Historically, its price action is characterized by long periods of consolidation followed by sudden, violent, and explosive rallies. Now, with the primary handbrake, the multi-year SEC lawsuit that suppressed institutional involvement, completely removed, the conditions are set for its most significant and sustained rally to date. The previous consolidation wasn't weakness. It was immense market pressure building behind a regulatory dam. That dam has now broken. The current price action is not the end of the run. It is merely the calm after the initial shockwave, as the market methodically prepares for the coming tsunami of institutional adoption and the great repricing that will follow. Institutional momentum, Weebus, ETFs, and the trillion-dollar onslaught. What do emerging Chinese fintech giants, Wall Street's largest asset managers, and conservative sovereign wealth funds based in the Middle East have in common right now. They are all converging on a single, now legally clarified digital asset XRP, and they are no longer just poking around or running small-scale exploratory tests. They are actively deploying and executing 9- and 10-figure strategies with conviction. June 2025 is the month where the institutional tide has officially and irrevocably turned from a cautious ripple into a tidal wave, and XRP is positioned directly at the center of this powerful vortex. Let's revisit the Weebus situation, which now seems profoundly prescient. Their strategic filing with the SEC for a $300 million XRP strategic reserve, once seen as a bold geopolitical signal, is now viewed across the global financial industry as the definitive blueprint for multinational corporations navigating the new world of digital finance. It demonstrated a sophisticated, long-view positioning by a major global player who sees XRP not just as a speculative currency, but as a foundational liquidity layer in a world undergoing rapid de-dollarization and actively seeking neutral, efficient, and politically unaligned payment corridors. With the SEC settlement finalized, that move is now seen as the established precedent, and well-sourced whispers in the financial centers of both Asia and the Middle East confirm that other international corporations and treasury departments are preparing similar balance sheet strategies. They are seeking to secure access to a compliant, non-sovereign bridge asset before liquidity becomes more expensive. Now, let's talk about the XRP Spot ETF. It has graduated from the realm of wildfire-level chatter to an imminent, almost certain inevitability. No one in finance has forgotten the tens of billions in rapid, market-altering inflows that flooded into the Bitcoin ETFs, fundamentally changing its market structure and legitimacy. Ethereum followed a similar path, cementing its status. With XRP now possessing unambiguous regulatory status as a non-security in the US, it is unequivocally the next logical asset in line for applications from the titans of asset management: BlackRock, Fidelity, and Grayscale. The internal discussions at these firms are no longer about the legal risks of XRP, but about the logistical timeline for their filings. The question is no longer if, but rather which of these asset management giants will be the first to have its application approved. This isn't just about providing market access. It's about receiving the ultimate stamp of legitimacy and productization from Wall Street, making XRP a standard component of diversified investment portfolios. Here's the critical difference that sophisticated investors must understand. XRP's market capitalization, even at its current elevated level of over $2, is significantly smaller and more elastic than Bitcoin's or Ethereum's were at the time of their ETF approvals. This means that any given institutional capital flow, whether it's an initial $1 billion or a sustained $10 billion, has a dramatically magnified, almost violent, impact on its market price due to lower overall liquidity depth. If and when a spot XRP ETF gains SEC approval, a process now far simpler and more straightforward post-settlement, even the most conservative demand models suggest that the initial wave of inflows from wealth managers, registered investment advisors, and retail platforms could trigger a massive repricing event, one that would likely dwarf the initial post-settlement rally we have already witnessed. But this institutional momentum is about far more than just ETFs. It's about the fundamental reclassification of the asset itself within the minds of institutional risk managers and portfolio allocators. XRP has officially moved from the high-risk bucket of speculative, legally ambiguous crypto asset to a new, far more powerful category: regulated digital commodity with clear, large-scale payment and settlement utility. That simple but profound status shift unlocks an entirely new, multi-trillion-dollar tier of highly conservative, long-horizon capital: public pension funds, sovereign wealth funds, university endowments, and corporate treasuries. These entities have strict fiduciary mandates that forbid them from touching legally ambiguous assets, but they actively and constantly seek out compliant, liquid, efficient cross-border instruments, a perfect, textbook description of XRP's new status. This isn't speculation. It's the logical, unavoidable consequence of regulatory victory. The trillion-dollar onslaught is no longer a hyperbolic, futuristic prediction. It's a calculated forecast based on the now addressable market of institutional capital that requires absolute regulatory certainty before it can be deployed. While retail investors were understandably focused on the daily price action and legal drama for years, Institutions were patiently waiting for one single thing: a definitive, legally binding green light. That light is now on, the gates are open, and the race to secure a position in the new financial plumbing has begun. Technological leverage, the RippleNet engine, and the Rust catalyst. RippleNet isn't just a buzzword in a marketing brochure anymore. It's the beating heart of Ripple's global strategy, now fully supercharged by its landmark victory in the United States. It is live, it is operational, and it is moving serious money across borders in real time. In June 2025, with over 70 financial institutions already actively plugged into its network across 5 continents, the strategic focus now pivots aggressively to expansion within the newly and fully opened U.S. market, the largest financial market in the world. And this month, Ripple's technological playbook gets even deeper, even more powerful. Enter Rust, Ripple's fully backed US dollar stablecoin. With the legal battles now concluded, the launch of Rust is imminent and is widely viewed by industry insiders as the critical, final component of Ripple's full-scale market integration strategy. It's crucial to understand that Rust is not designed as a competitor to XRP, but as a powerful, symbiotic complement. Rust is designed for fiat-side liquidity. It provides the compliant, regulated on-chain dollars that US banks, corporations, and fintechs need to confidently on-ramp and off-ramp from the digital asset ecosystem. XRP, meanwhile, is thus free to be fully optimized for its core, unique purpose: to serve as the high-speed, low-cost, neutral bridge asset, the ultimate settlement layer connecting Rust to other stablecoins, to foreign CBDCs, and to any tokenized asset across the globe. This dual-token dynamic is Ripple's secret weapon for achieving total market integration. Here's the nuance that most retail investors are only now beginning to grasp. XRP isn't being sidelined. It's being elevated and optimized. By offloading the initial fiat-to-digital friction, the part of the transaction that requires the most direct connection to traditional banking, to a dedicated, regulated stablecoin like Rust, XRP can do what it does best: move value instantaneously across jurisdictions and between different representations of value with unparalleled speed and finality. Rust brings familiarity and compliance to conservative institutions. XRP brings radical interoperability and deep, on-demand liquidity to the entire global system. Combined, they create a powerful, self-reinforcing flywheel effect. And that flywheel is already spinning. The pilot programs that involved central banks and private financial institutions testing multi-asset settlements are no longer just experiments. They are now considered proven case studies for full, large-scale implementation. The results were astounding and are now being circulated in institutional circles. Average settlement times consistently under 5 seconds, foreign exchange spreads slashed by over 70% in certain corridors, and full regulatory auditability built into every transaction. This is the operational innovation that institutions will now deploy at scale with confidence. Ripple's ultimate ambition is a single, unified framework where stablecoins, CBDCs, and XRP operate in perfect harmony. Think about that for a moment. A financial ecosystem where a central bank in Brazil can issue its digital real, a US corporation settles a massive invoice with Rust, and a liquidity bridge in South Africa uses XRP to finalize the foreign exchange loop in a matter of seconds. All happening seamlessly through RippleNet. With the definitive regulatory green light in the US, this grand vision moves from a distant possibility to a near-term probability. Ripple isn't just competing with other crypto networks anymore. It's competing directly with SWIFT and central bank clearinghouses on their home turf, armed with demonstrably superior technology and now, unassailable regulatory clarity. Technologically, the recent integration and adoption of Hook's programmable smart contract-like logic on the XRP ledger has massively expanded its toolkit for this new era. Conditional settlements, automated escrow contracts, and decentralized liquidity provisioning can now be deployed at an institutional scale on a fully compliant and performance-optimized network. What is coming isn't just a speculative price event. It's a fundamental and permanent transformation in global financial architecture, and Ripple is providing the widely accepted blueprints, the inevitable convergence, and the great repricing. So where does this all lead? We are witnessing a rare, powerful, and historically significant convergence of forces that, throughout market history, have consistently preceded massive, paradigm-shifting revaluations. This is no longer about speculation. nor is it about hype or sentiment. This is about a calculated, structural, and arguably inevitable repricing of an entire financial asset class, with XRP positioned firmly at the vanguard, leading the charge. This is the moment where fundamental value begins to aggressively assert itself. Let's break down this convergence into its three critical components. First, you have the force of regulatory finality. The landmark SEC settlement was not just a news event. It was the starting gun for an institutional arms race. It vaporized the single greatest barrier to entry for trillions of dollars of conservative capital, transforming XRP from a high-risk asset into a compliant financial instrument. Second, you have technological maturity and superiority. The RippleNet engine, refined over years of real-world deployment and now set to be turbocharged by the compliant fiat on-ramp of Relust, is not a promise. It is a proving, operational system. It offers a solution that is demonstrably faster, cheaper, and more transparent than the decades-old infrastructure it is set to upgrade. And third, you have immense, undeniable market demand. This isn't a solution in search of a problem. The multi-trillion-dollar institutional demand for efficient, transparent, and regulated cross-border liquidity is one of the largest and most pressing challenges in modern finance. Ripple and XRP are not just addressing this demand. They are positioned to capture a significant portion of it. The explosion we are signaling, therefore, is not merely a price chart going vertical, although that is a highly probable consequence of these convergent forces. It's a more profound explosion in real-world utility, as payment corridors activate and expand. It's an explosion in deep institutional trust, as pension funds and asset managers begin their allocations. It's an explosion in global network volume, as trillions in value begin to seek out the most efficient rails. And finally, it's an explosion in mainstream recognition, as the financial world awakens to a new standard. It's the cathartic moment the broader market, which has been conditioned by years of legal uncertainty and sideways price action, awakens from its slumber. It realizes that while it was distracted by fleeting narratives, mimetic trends, and the volatility of less regulated assets, Ripple was quietly, diligently, and relentlessly building the essential, indispensable plumbing for the future of finance. The legal war is over. The technological framework is complete, battle-tested, and ready to scale. And the institutional capital, previously locked behind impenetrable walls of regulatory uncertainty, is now fully and irrevocably unlocked. What we are witnessing in June 2025 is not the end of a rally. It is the very beginning of XRP's true, fundamental valuation phase as a core, load-bearing component of global financial infrastructure. The signals are no longer subtle whispers for those willing to lean in. They are deafening roars for all who are willing to listen. The great repricing has begun. If this deep dive into XRP's post-settlement reality has opened your eyes to the powerful forces at play, then you need to be part of the BCrypto Smart community. The game has fundamentally changed, and the information you get now is what will define your success and understanding in this new era of crypto. Do not wait. Hit that like button right now if you understand the gravity of this moment. Smash that subscribe button and, most importantly, ring that notification bell because the next wave of institutional news, ETF filings, and major partnership announcements will happen fast, and you will want to be the first to know, not the last to react. We don't follow the hype. We decode the signals. What are your thoughts on XRP's next major price level now that the path is clear? Let me know in the comments below. Stay ahead, stay smart, stay BCrypto Smart.